Good morning, traders and investors. Steve Gantz here. Welcome to the weekend update for the weekend of October 25th and 26th, 2025. I am back now in Southern California from my trip to Greece. Not totally rested up, still a little jet lagged, but a fabulous trip. Very much enjoyed it. And now it's time to get back to work here. So our markets are back to work as well. You'll notice that on Friday, we had a little bit of a breakout here. The S&P hit all new highs again. So, and it's doing it on fairly decent volume. So in other words, the volume is continuing to be solid on these up days. So that is still a bullish mode that we are in. We can see that this trend line here is still very much intact. Our long-term trend line, this blue channel, which goes back for months and months and months, is still intact. And we're coming right back into the center of this very long-term bullish channel on the S&P 500. So everything is looking strong here still at this point. Of course, SPY is going to look exactly the same. It's just 1/10 of the SPX, so SPY being the ETF. The S&P futures, very, very similar story, almost exactly the same as well. So those are all basically the same S&P 500 index, just different ways of trading it. Now we look at the volatility, the VIX reading of the S&P. We did get a spike in volatility last week when we had a pretty big sell-off day. But since then, the market has rallied higher. As the market rallies higher and the fear subsides, that volatility or VIX reading drops. The VIX is essentially a measure of how much fear is in the market. How many people are buying insurance on their long-term buy and hold portfolios, essentially buying puts. And are they driving the price of those puts up? They're not. They're not buying the puts. There's not fear in that market right now in the S&P 500. Then we get to the Qs. The Qs are equally strong, the NASDAQ index. Now, this channel and the NASDAQ has been in place also for quite some time here. And we've blown out of the top of that channel a couple times before, only to pull back into it. We're out of that channel again right now. We'll have to see if we're going to essentially develop a new, more aggressive angle here, which could be possible given all the advances in AI, etc. That remains to be seen. Or if we're just going to pull back into this channel and continue on with this same channel. That's something we're going to see play out over the next couple of weeks. And the volume bars here on the Qs, those up days are a little bit lower. Those volume bars aren't quite as strong, which somewhat indicates to me that the conviction for this extremely accelerated growth might not be as strong, which leads me to think that we might come back a little more into that channel. Still certainly bullish. It's just your levels of bullishness. It might not be quite as bullishness as this breakout would seem to be. We look at the volatility on the Qs. Volatility is very low, back to all-time recent lows. It also had spiked last week, but as the market accelerated again, that volatility came back off. Now we'll take a look at IWM. Now I've mentioned to you in prior weeks, IWM is just barely touching those prior highs. And my expectation here for IWM, the Russell 2000 index, is really that we've had this big, what I call a cup, and now we're forming a handle. This is a very bullish, strong pattern. But I think this sideways movement can play out for a period of time here. So I think this handle can chop sideways for some time and then ultimately probably break to the upside, that as most cup and handles do. But again, for the foreseeable future, I'm thinking more a little bit of sideways chop at those prior all-time highs in the IWM. We can also see that on those up days, volume is off. But volume's off across the board there in IWM. All the action is in the S&P 500 and the NASDAQ at this point. If we look at the volatility in Russell, it also spiked last week. is back down to these lows. So no fear in the Russell either, just a little less buying activity. It's not like there's any fear there preventing it from going higher. It's just that the buying money is going elsewhere in the market right now. Again, S&P 500 and the QQQs. And then we'll take a look at gold, which again, I called out a potential long on gold back here, and it of course shot up. It's no surprise to me that we had a big sell-off in gold there, as fast and as hard as that had run. If we look at those green bars in here, those green up bars were definitely significant, showing strong buying into gold. And it's only natural that at some point those people are going to say, hey, I'll take my profit and run. So they start selling. That creates a little bit more of selling activity. People start getting a fear that, oh my gosh, this thing's going to fall back. I'm going to give back all my gains. So all of those people that might have bought gold down in here on this breakout area are going to start taking profits. Now, generally speaking, what happens is you get a pullback that's about a third, which we're probably almost there, maybe to a half. So I would expect a pullback here into this 370, 360 range, and then probably start getting back to business, resuming back up to these old highs and potentially even surpassing them. So that's the market outlook. I am definitely bullish still in nature. So that's our market here for the last week and my expectations going forward. It is important to note that we have some major things coming up this week. We have a Fed announcement coming up next week that's certainly going to have some impact in the market. We also have some major earnings starting to come into play. We're re-entering earnings seasons now. So we're going to have lots and lots of different earnings reports that are also likely to move the market one direction or the other. And those are going to be ongoing here over the next month, month and a half or so. So those are what's going to tell us, is the market in line? Have company earnings projections kept up with the pace of the market or exceeded the pace of the market, in which case the market will continue to go higher? Or has the market outrun the expectations of what these companies are going to report earnings-wise, in which case we may get a little bit of a pullback? So we'll start to get a peek at that by next weekend as some of those earnings come out. So we'll look forward to seeing you all then.